Recent months have seen considerable activity by the international and U.S. regulators regarding the development of insurer capital standards. In particular, the International Association of Insurance Supervisors issued what's called the Basic Capital Requirement, or BCR, as a first step toward a more comprehensive group-wide global capital standard.
So the Financial Stability Board and the IAIS have identified companies which they believe to be systematically important insurance companies, with the overarching goal of being able to stress test these companies in the event of a major market dislocation or even a company-specific event that could impact the overall market. So the FSB believes that these companies should hold additional capital as a safeguard for the overall market. With that said, the IAIS has been tasked with developing a capital model for these companies that be able to identify the needed capital which captures all of the risk that they are facing. So obviously a major task. Then from there, they're hoping to incorporate the IAIS new capital standards into CommFrame, which is the common framework that all international regulators use to oversee companies that operate in many jurisdictions. The Financial Stability Board would prefer that they use sort of a Basel framework for this, but that obviously is going to be hard to incorporate with their historic relationships. So with that, we have seen a significant amount of new regulation globally, and this is the IAIS's attempts to sort of keep pace with the global regulation that we have been seeing. We are cautious. Obviously, we don't have any details as to what the actual capital standards will be looking like yet, but we will be watching the markets very closely for any changes in pricing, product mix, product offering, risk appetite, investment strategies, the cost of capital for companies to operate. So we'll be monitoring all that very closely as there could be some unforeseen or unintended consequences. The current timeline that we have is that in the next 18 months or so, they will have completed the insurance capital standards, then followed by 2 years of field testing, which they'll then sort of tweak and refine the current capital standard that they have, but then officially roll out the new regulation in 2019. So about 3.5 years from now, the regulation should be in place. And while we believe that a comprehensive and global view of capital could be beneficial to the industry, we are cautious. The current time frame is very limited, and we're not sure if that will be able to capture sort of the significant changes that we could have in the credit cycles, investment cycles, and underwriting cycles, especially with monetary policy being so divergent among the major banks right now. So we'll be watching that very closely.
We'd like to thank AM Best for their contribution to our program. If you'd like to see more of the First Monday series, visit the AM Best website.